All right, folks. Let me know if you can hear me out there. This is a woefully unplanned live stream. I kind of haven't done this in a while. Managed to have a little bit of time in my schedule in the last couple of days. So yeah, just gonna try it out. See who shows up. See if anyone shows up. But I wanted to talk to you guys today about it. Looks like we have our first couple of people logging on here to the live stream. Let me know if you guys can hear me. We got a different microphone setup. Just wanted to make sure that you guys out there can hear me. Anyway, let me know, and let me know what you guys want to talk about. This is an unplanned live stream. I have nothing on the agenda other than to talk about the stuff that I like to talk about. And looks like Juck Fun. You guys can hear me, so thank you very much. Looks like Alonzo Martin and King. Seen you on one of my live streams before, so feel free to ask any questions you like about any subject whatsoever. And if I don't know what I'm talking about, then I will just let you know. Okay. So Neo. Lots of folks want to discuss Neo. I like discussing Neo. The real issue with Neo right now is that I think mostly it's the fact that the investment just isn't moving fast enough to please a lot of people out there. And so there's a bit of unease. When you think about it, though, there isn't a lot of reason to be on Neo's bad side at this point, right? To think that they're not going to do exactly what they claim they're going to do. I'm a little bit concerned, of course, by the shortage in semiconductors. Initial estimates for when the semiconductor industry would be caught up was originally when they first started recognizing that there was a shortage back in November of 2020. It was assumed that by November of 2021 that that semiconductor shortage would largely be taken care of. Now it looks like that's going to extend partly into the beginning of next year. So yeah. Anyway, there's a couple of different things we could talk about when it comes to Neo. I think that the most important and exciting thing out there is, of course, the Neo Park. Now, I don't know if you guys are reading the articles out there about Neo's park they're building, but it's essentially this gigantic investment in a complex to create a manufacturing center along with a research and development center for electric vehicles, not just for Neo. They plan to have hundreds of other companies in this space right now, all operating from this one sort of campus-like facility. Now, this is not unique in China. Right now, there are at least 8 or 10 other sort of city-sized development projects for the green future, electric future, for new energy vehicles and new energy solutions that are in development all over the country. Look, this is what happens when you have engineers and economists who are the ones making the decisions about how to direct your economy, rather than, let's say, in the United States, we have most of our legislators are actually lawyers by training, something like 88% of them, or some ridiculous number like that. Our lawmakers just aren't really equipped educationally and perhaps even intellectually to understand the complexities of how you develop an economy to some degree. So this is one of the reasons why I worry a little bit about our competitiveness going forward. It's one of the reasons also that I really like Neo's prospects. It's not simply that they have the tailwinds of the government behind them at this point. They have society behind them at this point. Not just Neo. If you're not paying attention to Chinese language media, then you probably wouldn't understand there are a lot of other players in this industry, and it's not just Neo. So I'm going to go through and look at some of your comments. King Carlo Basio says, Neo 100 this year, next, or never. So one of the things you'll note from my channel, King Carlo, is that I don't really make price predictions. I don't tell you when an exit point or an entry point on a stock is. So I am a professional financial planner and financial advisor. I'm not actually allowed to do that on YouTube. And no one who is a financial advisor can tell you when to enter or when to get out of a stock through a YouTube channel. But I will say that Neo will hit $100 at some point. The timing of that is I have no idea when. But I even think that $100 is kind of a low bar there. I think that we're probably going to see them in. So when I'm looking at the calculations that I'm looking at for when I do my own calculations here, I kind of err on the side of cautiousness here, and I'm saying that they're going to catch 6% of the domestic market in China, and their international exposure is going to be negligible, right? That's my bear case for them, is they have 6% of the market in China and virtually nothing outside of China, right? If they do, it's not that significant. That means, if they're making basically, if their revenues on average are about $33,500 per vehicle at 6% of the market share, future market share, that makes them a $52 to $54 billion a year revenue company, right? So I would say that probably minimum in that case would be $100 price once they hit that maturity level. They capture around 6% of the market. I honestly don't think that they're going to capture much more than 6 to 8% of the market in China. If you look at the largest player in China right now, it's actually VW. They have about 14% market share. No one seems to stay on top very long. It's a very fractured market. It's a gigantic country. There's a lot of regional differences. And there's a lot of cultural differences in China that you wouldn't necessarily know are there unless you visited a couple of times or kind of explore the culture. But it's very different from one place to the other. But that's not to say that they won't have more success out of the country than they have, actually in China. If you look at a country like Geely, where they're kind of right there, they have about they make about 1.6 million vehicles per year. Their revenues are right at about $50 billion per year. They just haven't had a lot of the press. They're basically the largest Chinese auto company that you've never heard of. If you don't really know the Chinese auto industry is Geely, and I'm looking at them being at the same size production-wise in Geely within the next 3 to 4 years, at least the potential for that sort of production. And that's really based on the NEO Park. If you looked at the amount of gigawatt hours they're expected to produce at the battery factory in this NEO Park, that would support or suggest that they could support producing about 1.3 million vehicles in that park sometime in the next 3 years. That's a big step forward for them, a big leap forward. It's not clear to what degree they're going to be working with JAC, but supposedly by the end of the year, they'll have an additional 300,000 capacity just in their JAC factories. So yeah, I'm actually I'm pretty interested to see where this is going for right now. But anyway, King Carlo, that's the first question that you've ever asked. And so anyway, can you talk about why the market crashed? Jack Fund, you're going to have to be a little more specific, because I'm not saying that the market crashed. The tech stocks were down for a little bit, for a couple of days. Had a lot to do with some comments that Janet Yellen made, a lot to do with comments that some people connected to central banking are making about slowing down the economy or actually putting the brakes on the economy because they're worried about overheating. None of that is actually, a lot of these folks aren't the ones making policy. So yeah. Thoughts on the volume of buyers in the market smart money is getting out? I'm not sure that that's the case at all. Smart money is just getting out of many of the stocks that we probably like as tech investors, but that's not actually reflective of the numbers whatsoever. I do think that one of the most interesting statistics that I've read in the last couple of weeks was an article, and I don't want to quote this incorrectly, but I'm probably going to quote it incorrectly. It's something like 40% of the second round of stimulus funds that were received went directly into markets of one sort or another. And a high percentage of those actually went into cryptocurrency. So I'm not sure that smart money is getting out of the market. And for a couple of different reasons. Mostly institutional money doesn't have the ability to get out of the market because of the rules surrounding how they're supposed to be invested. If you are, a large cap fund, then you have to keep 90% of your assets or at least 80% of your assets in large cap stocks at all times. You may move those around from one sector to another, but they still have to be in large cap funds. The same is true for a lot of retirement funds. The same is true for ETFs. And that's where most of that institutional money is locked in by the investment policy statements of the different funds that they work with. So that statement is, as I said, I don't know that was true. So, but I will say that there are a ton of new investors in the market, in this market in particular, that we've never seen before. Hey guys, I did want to remind you as we get started here that the super chat features are on if you feel so inclined. And so I don't really know how that works since I've never used it myself. But and then Ming Tran, frequent person who comments on my channel, a frequent person who shows up on my live streams. Thoughts on BNGO? So I always tread pretty carefully when it comes to a lot of these stocks that seem to take off without a lot of indication as to why. And Bngo is one of those. So when I did my initial research back on them in late December, it was really because they sort of popped up on Reddit, and then Tom Nash did a video on them. And I started reading about their technology from their website, and all of that seemed really great. The problem is I know a lot of actual scientists, and I started talking to them, and they're telling me that this technology is not all that special. It's not all that revolutionary, and they've got a really slick marketing campaign. So I don't know if I'm really wholly convinced by that at this point. And I kind of forget where I was in my research, but I know that they're looking at differences in long chains of DNA rather than like really short snippets. But that research was 4 months ago. I'd have to go back and take a look at that. But it is actually on my list. I like to take a look at things after they kind of go through their meme stage and see if there's really something to them. Like Microvision was one of the companies that I took a look at early. And at this point, I'm thoroughly unconvinced by Microvision. I think that the original assessment that they are a 25-year science project, that they have some really cool technologies, but they don't have the means to commercialize them is probably correct. Yeah. So where do you see these high PE stocks start going up? When do you see these? So Makamodi, when I see these high price earnings stock starting to go up, well, right now, a lot of the speculative investments have already been made. A lot of the people who don't understand that investing in any sort of new technology, new field of technology, or sort of changeover requires a lot of patience because number one, there's going to be long flat periods where your investments don't do well, long periods where they're down and they don't do well. And a high number of the companies that you invest in really actually aren't going to make it, right? So you should have some degree of diversification no matter what field you are that you're investing in. But I'll tell you, for a lot of these high PE stocks, and you're going to see this first in fintechs because they're the ones that are most firmly going to demonstrate this quickly, is you actually have to see revenues catch up to expectations of growth. And that's first going to happen in fintechs, particularly if we see a rise in interest rates. I'm looking at Sofi right now. Pretty heavily. I own quite a bit of IPOE, and they've applied for a bank charter. It got preliminary approval. They also acquired a company. They acquired a bank, so that means their bank charter is probably going to get approved a little bit more easily. But look, as interest rates rise, that means there's a greater spread between what banks are paying on deposit dollars that are at their banks and what they're loaning the money out for. That just benefits financials, right? So when you're looking at a lot of high PDE stocks that people are looking at right now, we're talking about the cash, the IPOEs, whatever else. I just can't think of all the different fintechs out there like PayPal, all those. As those earnings levels start to come up, you're going to see those prices justified. You see them shoot up again. There's still a lot of room to run for Square. There's still a lot of room to run for SoFi. A lot of room to run. There's literally 500 million financial accounts that are up for grabs from traditional institutions that are going to move to a mostly online sort of basis here pretty quickly. But and it's not going to be a winner take all kind of situation. You're looking at a winner take the most type of situation. I think there's an avenue for success for SoFi. There's an avenue for success for Cash. I mean, they already are successful, but a number of other players out there. I think though that probably the biggest fintech IPO this year is not going to be SoFi. It's actually going to be Stripe. Stripe just actually is a much more valuable company from the outset, and I think they're going to be one of the most valuable ones out there. If last year, one of the things we should talk about probably is sort of the Spac mania that's going on right now. The Spac mania, despite the fact that the SEC just came out with new guidelines on how warrants should be treated throughout this whole process. So a lot of SPACs that went public earlier are going to go back and restate earnings from the year prior. That's why you had a lot of earnings restatements recently, and it didn't affect the stock price very much. That's because that's all generated by new guidance from the SEC to restate how those warrants are treated in the financials. Has nothing to do with something that the company was doing that was nefarious. It was just a rule that was unclear before. But here's why we're going to see more and more SPACs come out until we get to a point where there's actually more failing SPACs than there are successful ones. And this will happen mark my words, is because for the people that make that initial sale of SPAC stock, meaning the people that are, for Chamath Palihapitiya, he takes virtually no risk whatsoever in bringing a company public, because he goes out, he starts his company, he raises the initial $10 a share for the SPAC. They put that money into some sort of risk-free, short-term government bond instrument, and that's where they make profit no matter what. And then they use that to go out and sponsor the company merger, right? And to buy. So basically, they're making money off of the interest on that short-term instrument, no matter what happens. So you're going to see this happen more. And so the problem is right now, there's still plenty of really good targets. So a SPAC company has 2 years to go out and identify a suitable target, merge with it before they have to return the money to the shareholders. So right now, there's plenty of really good targets out there, but there are 480 something registered SPACs right now. And I think very quickly, you're going to run out of good ideas in the economy and good candidates for a SPAC. So when I say that it's inevitable that you're going to have the SPAC industry expand until there's going to be a collapse, I really mean that. And it's absolutely inevitable because of this whole risk-free factor in the money. The original folks who go out and the original owners of the SPAC who go out and sell interest in the SPAC so they can go out and acquire, those are the ones that are taking zero risk whatsoever, right? It's the people that buy the shares of the SPAC who are going to merge with another company. Those are the ones taking all of the risk. So the money behind the initial formation of the SPAC is going to go turnover over and over and over. They're going to create more and more and more of these companies until the whole industry starts to collapse because there aren't any good candidates left. And that's going to be temporary, and we'll probably see another wave of this a decade from now. Are there going to be some great opportunities to make money? I think there's going to be tons of them. But a lot of the companies that we saw go public in the EV space last year by SPAC will be out of business in the next 5 years. I'm not going to name which ones individually because I don't really know, but I think it's pretty much equally likely that any of the ones that went public last year could go under. Shula's Joe says, "Hi, Jason." Hi, Joe. You're back in the UK. That's right. So Mintran also says, "What do you think needs to happen so the market starts an uptrend?" So look, the market is a forward indicator. A lot of what we saw was during the last couple of months was not reflective of how the economy is. It was reflective of how the economy how we think the economy is going to be 6 to 9 months from now, right? The stock market is a forward indicator of economic sentiment. There was no reason to be optimistic when half the economy was shut down. We're thinking half the economy is not going to be shut down 9 or 10 months from now. What the market is telling us right now is that 9 or 10 months from now, we don't think the market is going to be any different, or the economy is going to be any different than it is maybe like right now or early June. So I think that things are going to get really, really better really quickly. And I think the biggest danger here is economy overheating to a degree. And so there are a few things happening right now. But I'll tell you, one of the strangest indicators of market confidence is, so money, power, and sexuality are all wrapped up in a weird way due to how we evolved, right? So one of the weirdest indicators to me, and this came up in a discussion that I had with some high-level people that I work with as a financial planner, they noted that condom sales were up 23% year to date. Why is this a big deal? And we discussed why this was a big deal in our meeting when we're talking about the psychology of the investor, the psychology of males, and it's a better indicator of confidence in the male population than anything else. Because males are going to go out and buy condoms if they think they have the remotest possibility of actually being successful, right? But they've also noted, based on scientific studies done over the last couple of decades, that men who are employed part-time have fewer mating opportunities. Men who are unemployed have fewer mating opportunities. And it's the men who are employed full-time who are the ones who have the most mating opportunities. This is an indication to me, the fact that condom sales have risen 23% year to date, it's an indication to me that the male population in the United States has more and more confidence in their own financial future at this point and their own economic future at this point, that they're starting to basically plan on having those opportunities. Well, I mean, whether or not that's true or not, like I said, the perception of that, the psychology behind that tells me that something enormously positive is happening in the economy right now. Now, is it going to be more positive 9 months from now than it is, say right now or in June? I don't know. And I think that's really what's behind kind of the stall out in the market right now. Remember, it's a forward-looking indicator. So right now, most investors in the market don't think that the economy is going to be better 9 months from now than it is right now. We have seriously low unemployment right now. I see help wanted signs everywhere. I do see an interesting trend when it comes to those help wanted signs. The most desperate help wanted signs seem to be from the businesses that pay their employees the least amount of money. It's almost like because of the enhanced unemployment benefits because of those enhanced unemployment benefits, it's almost like people don't want to go back to work for $7.75 an hour, no matter how easy that work was. So I'm looking forward to how that changes the labor market, because I think it probably will. Anyway, I wanted to thank everyone who has shown up for this impromptu live stream. This was absolutely unplanned. We can talk about anything at all that you want to talk about. Did want to remind you guys again, though, that the super chat features are on if you want to use those. Tran already used those. I wanted to thank you very much. And Shoeless Joe says, any thoughts on why Li Auto is so cheap right now? Yeah, I have a couple of different thoughts on that, especially when we look at their sales. They're rising. They're steadily rising. Barron's wrote an article on this just last week. It said, they were stating that the rise in their sales looks pretty good for right now. Looks pretty good month over month, but long term, perhaps it's not so great in terms of growth. So Li Auto is a slightly different stage than Xpeng and Neo are. They only have one vehicle model, and they're in a slightly different market, right? They sell that electric vehicle that has that range extending gasoline engine on board. They have plans, and I verified this in Chinese media, they have plans to go fully electric at some point once Chinese charging infrastructure catches up to where they are. But they're doing what they have to alleviate that range anxiety right now. I'm actually really encouraged by the way that their sales have grown. I just think that there's a lot of headwinds against them right now, and primarily it's that chip shortage. That's going to affect everyone here. Yeah, I know that Neo is worried a little bit that they're not going to be able to meet those second quarter numbers. I know that Xpeng is worried that they're not going to meet those second quarter numbers. And let me tell you, they are going to have an easier time finding the chips that they need, the semiconductors they need to make those really low expectations of 15,000 to 20,000 deliveries for a quarter. It's companies like Ford and GM that need these by the millions and millions that are going to have a hard time meeting expectations. So I think GM was saying that it may cut their production by almost 1 million vehicles to 2 million vehicles this year. I think that, that could be amazing. That could be an amazing thing. It could be an opportunity for companies like BYD that make their own semiconductors to grab a larger market share. So one of the comments that I got most recently and most often on videos and in private messages is, why don't you own BYD? You cover BYD so well. It's just a matter of me not having infinite wealth, guys. I can't own every single stock that I like. And I generally tell people that I own a stock when I do a video on it, so you'll know whether or not I am biased when it comes to my analysis. And you should assume that if I own the stock, no matter how neutral I'm trying to be, that I am going to have some degree of bias. So thoughts on Doge to the moon. This is an unpopular thing, but I don't really care about Dogecoin. It's I know actually a bunch of students in my jiu-jitsu academy have made pretty good money with Dogecoin. And so I made pretty good money with Dogecoin right now. And I think that's pretty amazing. Sorry, guys, my phone just went off there. It was actually one of my jiu-jitsu students calling. But I don't have any faith that's actually going to see growth as a medium of exchange. I tell you, there's a couple of things that I do like. I only own Ethereum basically because I bought it just to keep myself interested in it. And then I invested a little bit more in it after working with one of the guys from my Patreon group and doing some research on Decentraland and the Metaverse. And so I bought a little bit more in the way of Ethereum because of that. And I just happened to catch that ride up. And so I've made pretty good money on that. Look, I'm actually far more excited by the adoption of cryptocurrencies and of Bitcoin and Ethereum as a means of exchange than I am about the price of those going up. far more excited about that. So in a lot of ways too, I'm looking at Decentraland being built on an Ethereum backbone, with Mana being built on an Ethereum backbone. And I'm looking at this and I'm thinking at all of the changes that I've seen in my life professionally. Like 10 years ago, I could not have imagined 15 years ago when I met with a client, it was always face-to-face. And I even had a hard time working just over the phone with clients. Now, 100% of my business is over the phone. I almost never see any of my clients in person. It's either over the phone or it's online via Zoom. Here's what I can see happening. And I know this sounds crazy right now when you're thinking about it, but here's what I can see happening. I can see myself moving my entire financial advisory practice online into Decentraland, meeting with my clients in virtual reality, giving them advice in virtual reality, being paid in Mana, in Decentraland Mana, and doing everything in virtual reality. I can see that happening just because of how much my life has changed because of technology so far. I think that I can actually see that happening. Adam says, thoughts on Algorand? I'm actually only partway through that 75-page paper on Algorand right now. I will say one thing that I like about them so far is that their solution is a bit more elegant when it comes to energy usage. It's a lot less bad for the environment than other cryptocurrencies are. If you haven't thought about it before, Bitcoin is actually pretty bad for the environment because of the giant energy requirements for it. Algorand would seem to solve some of those, at least theoretically. But I don't want to give too much away right now because I haven't read the entire paper, and I don't want to give you guys opinions that are more based on ignorance there. But yeah, back to Dogecoin for a minute though. Look, at some point, and it's put it this way, because cryptocurrencies are not regulated by the SEC right now. That is the reason that Elon Musk is not getting into trouble for manipulating the Dogecoin market. If he turned around and said the same thing about Tesla or even about one of his competitors on Twitter, he would be severely reprimanded in by the way of fines by the SEC. So it is market manipulation to a degree. I think that it's funny that a joke meme like that has made people millions, and but I think it's pretty interesting. But I'm far more excited by Ethereum at this point. I'm far more excited by the applications that the technology has for transaction verification, for decentralized finance. And I'm getting more excited about this the more I read about this for a couple of different ways. But look, if you can get a guy my age to look at Decentraland and say, and like, I'm not a video game person. I just started playing video games in the last 10 years. I don't, which is odd, but I'm 47 years old this year, and I'm going to start my own Decentraland account, start seeing what ways I can do business inside of that, and start moving a portion of my practice into virtual reality. My personal business practice is in virtual reality. If you can get a guy my age to do that, I think that's sort of an indication of just how much the technology is going to change life for everyone here. Doug B says, a guy that I work with brought us lunch today because he made so much money for now, at least gambling on Dogecoin. Yeah, I went on Facebook for the other day for the first time in months. I had to quit Facebook, guys. I just was seriously way too mean to people on Facebook. I'm just I'm very rational and kind of mean when people don't respond well to rational thought. So I stopped going on Facebook for a while, but I went on, and every third or fourth post on my feed was about Dogecoin. And I'll tell you, a lot of it came from people I didn't expect to that. Yeah. But Min Tran says, I do not own any crypto, but it's giving me FOMO. What do I do? I don't have enough in it to really affect my life one way or the other at this point, Min. I have a couple of $1,000s in Bitcoin and a couple of $1,000s in Ethereum, and I just bought $5 of Mana today. $5 whole of Decentraland Mana. I do that literally to keep things on my radar, so I'll keep going back and looking at them because they have so many different things I want to research. But yeah. So Fresh Aquarium says, you getting nervous at all about XPEV? XPEV feels a little bit intense, but I do love they talked about getting the semiconductors. I'm not nervous about them at all. So I'm not acquiring any more NEO just because I have a lot of NEO. It makes up a very large portion of my portfolio. I am adding Xpeng. I think that if you added either one of them to your portfolio right now, 5 years from now, this is going to look like a ridiculously good entry point. I've always been of two minds when it comes to Xpeng or Xpeng. I think Xpeng, in terms of their control over the manufacturing process, how vertically integrated they are, control over their margins. I like their vehicles. I like everything about the company, especially when it comes to how many factories they've built. What I don't like about them is their branding. I think the branding actually sucks. I think that Xpeng is a company name that's going to be hard to export out of China. Neo is something that you're going to be able to take that name anywhere in the world, at least in all the languages that I know and can think of, and that's going to do really, really well. Xpeng they might have to rebrand when it comes to going international, and I'm pretty encouraged by the fact that their vehicles in Norway have sold really well. It looks like Neo's next target for expansion is either going to be Denmark or Germany. I do know now, I have verified this, that Neo did buy property in Copenhagen. It's not clear what that property is for, though. Chuck Fun says, does the SEC have authority over crypto? No, they do not have authority over crypto. That's one of the beautiful things about that is they don't. To be in compliance with U.S. banking laws, though, if you're going through Coinbase, then you're in full compliance with U.S. banking laws. In some of the beauty and protections that you could be getting from an offline Bitcoin wallet, you're not going to get with Coinbase because of that. They haven't done full tax. I know this because I just did my taxes. They don't have full tax reporting from Coinbase this year, but that's probably going to come in the future. Let me see here. Rental car companies are buying cars at auction now due to the microchip shortage. It's definitely different than the norm. They used to buy new cars cheaper in bulk and then rent them out and sell them. Yeah, that's something that I heard recently too. It's just a quick article that I read, but that is a concern at this point. Look, one of the things that I made this point in my video on NVIDIA, and it was about GPU companies, but it's really been about all chip companies. Chip companies has really been a story of survivorship, less than success. It's been a story of survivorship because of stiff competition, especially in the early days. Back when NVIDIA got started in the 1990s, they started off with 70 different competitors that were just GPU companies. All they made were GPUs. And that was, I think, in 1993. By the time 2002 rolled around, they were the only dedicated GPU company left. All the other ones had gone out of business. And when you looked at a post-mortem study of why those companies went out of business, seeing how much capacity you have is very, very important. The chip companies would rather there be a shortage of semiconductor chips than would be a surplus, because it's a commodity at this point, just like anything else. There's a surplus of chips, the price drops like a rock. I don't know if you guys are old enough to remember this, but I remember when a Walmart in my hometown actually closed down. I know that sounds unbelievable that a Walmart location could close down, but yes, it's true. A Walmart in my town closed down, and Compact Computers was located in my town, and they had these giant shipments of chips that were coming into their factory there, into their center there, and they stored them at this old Walmart. There were armed guards carrying the AR-15s, walking around the building day and night to protect it, because at this point, chip prices had spiked so much that they were so valuable that there were armed gangs going around stealing these chips in order to sell them to other computer manufacturers. And there was actually a big scandal this was in Texas at the point. There was a big scandal because there was a market for these, and some well-known computer makers that one of the guys I'm thinking in particular, they actually went out of business for another reason, but they were actually buying these chips on the black market so they could produce, desktop computers. So there's been a couple of times in history where we've seen these shortages do weird things to markets when it comes to semiconductors. So Fresh Aquarium says, here is my primary market concern. I'm worried about the extrinsic factors of xpev. I think that right now it's an amazing entry point based on my analysis. This is my strong buy target. Like I said, I will say again that if you buy xpev today, I think that 5 years from now, the price is going to look stupidly cheap 5 years from now. This is another company where I think they actually have a chance of grabbing a slightly larger market share than Neo, because they're more established down market and they're more established with a younger crowd. This is one of the things that's missed by Neo, by Neo fans, is that Neo is really targeted an older crowd. That older crowd has more money, and they get more money per unit sold with a Neo vehicle, but you're looking at a much larger market for Xpeng. And I think that 5 years from now, 6% of the market in China being owned by Xpeng would be low. I think they're going to grab a little bit more market share at probably less money per vehicle per unit sold than NIO. Yeah. And Jonathan, what's going on, buddy? He says, I love how the IRS and the SEC have different legal opinions on crypto. Man, so Jonathan, you don't even have the half of that. So I paid a programmer this year in Ethereum to do some work for me, and I actually have no way of telling what I'm supposed to do with that. Right? I have no way of telling how I'm supposed to treat it, and there's no guidance in the IRS code to tell me how I'm supposed to treat an asset that I bought for very little. It turned out to be a lot, and I used it to pay wages to a programmer in Hungary via Upwork. Right, or it was either Upwork or Fiverr. I can't remember which one, but for right now, I'm taking a deduction on it, and I'm just going to see what happens. So, which means that I'm not paying capital gains tax on it, but I am taking the deduction because I used it to pay for labor. So I don't know what's going to happen. I really hope I don't get audited. I really hope that I don't get audited. It wouldn't be the first time, and it's never pleasant though. Shanez Alidina says, is it safe to put 80% of your funds in FANG for the long term? Look, this would border on financial advice, which is something that you can't really give legally over the internet like this. But I would say that personally, that's not something that I would do. There are a lot of other sectors to cover. If you were an investor in FANG stocks before there was really a FANG, let's say that in technology stocks between 2002 and 2011, things didn't look very good for you for a very long time, right? You weren't making a ton of money. FANG stocks have done very, very well since about 2011 or so. But you don't want to judge, future performance based on what something has done in the past. It's okay to concentrate bets. Everyone here listening in my podcast or listening to my channel or whatever is swinging for the fences to a degree. You want to outperform the market. You want to do better than the market. Look, I have roughly 70% of my investable assets that are dedicated to the stock market. 70% of those are in not mutual funds, or in ETFs. And it may be more concentrated in one sector than another, but I have broad diversification across different industry types. And with the remaining 25 to 30%, that's where I tend to swing for the fences. And I do very little selling. I do mostly buying, very little selling. But once something becomes a significant portion, once one single asset becomes a significant portion of my overall net worth, like greater than 10%, I'm forced to sell off some of it. And those funds go into my ETF portfolio, just because I know I'm less likely to lose money. It's basically over the long term, I'm not very likely to lose money on those. Meaning, and if I look at any rolling 7-year period and I have money in an S&P 500 fund, it's highly unlikely that I'm going to lose money. Even though we've seen a couple of those rolling 7-year periods just in the last 20 years, looking forward into the future, it's highly unlikely that with that amount of diversification, you're going to have in any one year, of course, there's a likelihood that you could be down and down significantly. But over a 7-year period, your likelihood of being down in an S&P 500 investment is actually fairly low. So look, a lot of stock YouTubers really are not that old and have not been doing this for quite a long time. So I've been investing for a long time. I've been a financial advisor for the last 15 years. And I can tell you that for as many victories as I've had stunning losses too. And you should be learning from your stunning losses. And one of the things that people are going to be surprised at this year is that a lot of the people that made tons of money last year aren't going to make a dime this year for two reasons. Number one, everyone's a genius in a bull market. And last year, everyone was a genius because it was a bull market. But number two, even in a flat market, a lot of people are going to lose money because of frequent trading and just calling things incorrectly. When I buy a stock, or Doug B, thank you for your super chat. Thank you so much, buddy. So when I buy a stock, I theoretically, my holding period on a stock is forever. Theoretically, right? I want to buy a stock and not think about it. Like I bought Tesla in 2011, and when I did, I really didn't have a good reason to buy it. I just liked the idea of Tesla. And I held on to it for years. Like, guys, he was down for years at a time. I made money, and then I thought about selling, and then it would drop, and then it would just stay there for years. And it was very frustrating to own. At this point, I'm just used to it. NIO and Xpeng are probably going to be the same way. over the next 10-year period, when you look at there's going to be so much volatility in those stocks over the next 10-year period that I bet over the next 10 years, you're only going to see about 10 days in that 10-year period where they actually hold on to the gains they make. So I think they're going to hit $75 a share again, and then they're going to decline back below $40 a share. I think it's going to happen over and over and over the next 10 years. And over the next 10 years, there's going to be maybe 10 days, and I'm not throwing this figure out randomly either. That's backed up by researchers. There's maybe going to be about 10 days where they actually hold on to that gain and they never go back below. So I think that a little patience is warranted here. Folks that bought NEO in December and they're like, why is it down? I want to bail out. You will never make money. And I know that I was just told by someone never to make absolute statements like this. But look, I've been in the business long enough to know that if that's your attitude now, then you're probably never actually going to make money in the stock market. We know based on statistics that different wirehouses have shared that almost all small investors lose money over time if they are actively investing, if they're actively trading. If they're trading more than 2 or 3 times in a month, they lose money over time. And this has not been true this year, not true for the last 10. It's been true for like 60 years that the small investor who's active loses money over time. And the buy and hold investor, and you see these articles all the time. Buy and hold investing is dead. Buy and hold investing is dead. It's only dead temporarily. It's only dead for a while. If you look backwards over any of those rolling periods, it's always a long-term buy and hold investor that wins out in the end. One of the most striking things statistically about the stock market, and this is true across all investing platforms, is that these are rough percentages, but over the last 20 years, any 20-year rolling period, you're looking at the stock market averaging about 11.3%. You're looking at the average investor return when the stock market averages 11.3%. You're looking at the average stock market return for the individual investor at about 3.8%. 100% related to the investor's decision-making process. Couple of things. Number one, they're just going to call things wrong all the time. Number two, if this is not money that you do not need, then you simply can't commit it to a long period of time. You're going to have a period where you are forced to liquidate because the market is down. You need to cover, cover margin call, or you need to put a new roof on your mom's house, or you're unemployed for a while, and that's going to cause you to sell at an inopportune moment. But the real driving factor here in that number, that huge difference of 8 percentage points between what the market returns and what the individual investor receives, is 100% driven by investors' decision-making process. Nobody wants to hear this because it is something we don't like to think that we're wrong all the time, but that's just the bare reality that we are. Any thoughts on Warren Buffett's recent comments regarding inflation? Yeah, I'm not. Look, no one ever wants to go against what Warren Buffett says, but I'll be honest, I don't see what he's seeing in terms of inflation, and he's not looking at CPI, and he's not looking at all of the other inflation indicators that are out there. What it looks like we're seeing right now is a lot of reflation for certain asset classes that went down in value, and a lot of things that are going to be temporarily impacted because of supply shortage, because people cut back. A fence that I need to replace. 2 months ago, I replaced 5 feet of fence for $1,000. Did it myself over a weekend. That same 75 feet of fence now would cost me like $4,500 to do, because there's a giant shortage in lumber at this point. It's not an indication of inflation. It's an indication of a lack of supply. It just looks like inflation. The same thing is happening with oil right now. We had a lot of production that was shut down. A lot of people don't realize what happens with the oil industry. Like, once oil goes below certain thresholds, certain types of oil drilling and oil production just stop, because you're losing money for every barrel that you produce. But you can't bring those production facilities back on instantly. It takes a while to ramp them back up. So I think that by midsummer, we're looking at really high fuel prices because of a lack of supply, not because of inflation. We're looking at certain food, like we're going to look at a couple of things. Like, corn prices right now are going through the roof. Like, I'm from corn country, guys. You guys probably don't think about corn very much, but corn prices are going through the roof right now. But I'm old enough to remember when you could get 56 pounds of kernels of corn and it would cost you like $1.50, right? So like that's markets change based on supply. Right now we're not seeing any evidence of real core inflation, which is one of the things that actually surprised me. They said a couple of things in that meeting. Like Charlie Munger said that cryptocurrencies were what did he say, it was a disgusting affront to civilization, or something about being counter to the interests of civilization. I'm not sure that he so much insulted an entire new generation of investors, because I wouldn't call people that are putting money into cryptocurrencies right now. We're not. I don't consider what I put in there an investment. It's mere speculation at this point. But the idea of having decentralized finance that is in parallel or apart from a central bank that is borderless, right? I can use this as a means of exchange without the interference of a foreign government around the world. I just don't see a problem with that. I think if you have a problem with that, it's because you're someone who loves central authority. I'm sorry, guys, that's not me. And I think that if you have a problem with that, you really don't understand what's going on with cryptocurrency. And I've refrained from commenting on cryptocurrency with any degree of emphasis, because I'm still studying it at this point. I'm only talking about what I know to talk about at this point. This is a giant subject, guys. If you look at the theoretical math behind this, I can guarantee you that if you go out and talk to 10 people, 10 of your friends who think that they are experts in cryptocurrency, out of your 10 friends, exactly 10 of them will have no idea of the math behind cryptocurrency and the minds behind cryptocurrency, and how like basically everyone who's a founder of a cryptocurrency or an expert in it usually is an expert in cryptology at the same time as well, especially the founder of Algorand. I can't remember the guy's name, some Italian guy. But I'm like halfway through reading his paper, and I've had to go back to refer to other types of theoretical math that I've forgotten about over the years because I haven't thought about them for years. But going back, like, you're going to find very few people that understand cryptocurrency and its applications across everything, and understand blockchain and its applications across everything in our economy. You have a lot of people who think it's an investment and it's only an investment. It's not. It's a lot more than that, guys. And it's going to affect a lot of things that happen in our life. So Doug B says, crypto news, is our government starting a digital dollar project? Yeah. Well, of course. Yeah. Yeah. Supposedly they want to support the unbanked populace. One of the things we discussed in my Patreon group this morning, just a little bit, and no one really has an answer for. And this was something that a number of other pundits have discussed too. Is when it comes to cryptocurrency, I don't think you're going to see. I think that the idea of cryptocurrencies replacing central bank currencies, that is never going to happen. I think that it's going to be a strong parallel system of accountancy in the future. And there's one really, really big reason. You cannot discount the fact that the intervention by central banks has kept depressions. So if you guys are students of economic history, then you'd realize that depressions generally in the past and recessions in the past have lasted for decades on end in a lot of cases. And that's because central banks either didn't exist or they didn't have the tools to control liquidity, right? One of the biggest things right now about banks that's super important is that whenever they get money on deposit, they can loan out many more times dollars than they actually have on deposit. And then they use leverage. They basically leverage the deposit dollars they have to create new money as electronic entries, right? So yes, that has an impact on the value of the money that you have. It contributes to inflation, but it also creates liquidity in an economy. When we had economies that were gold based, or economies that don't have a central bank that can control liquidity, your recessions and your depressions tend to last for a decade or more. And this is what people don't really, everyone that's upset with the Federal Reserve doesn't really have a ton of historical perspective here. Read up about the Panic of 1873 and how long that lasted. And actually, the Panic of 1873 actually lasted into the early 1890s, right? This was a 17-year-long depression in American history that lasted, it lasted basically a 20-year, basically a 20-year period. But it was actually amazing. So it's very much more complex than just replacing central bank with a decentralized blockchain method of keeping track of transactions. That's not going to happen. I think that they're going to exist in here. So No, you can't use financial engineering to put off a crisis. Yes, we can, Jonathan. In fact, we've done it many times now for the last century. Marie L says, I'm rolling over my 401k from my previous employer. Do I need an advisor? Marie, the answer to that question is a definitive no. You don't need an advisor to do that. You are completely capable of opening up a IRA account on your own, rolling that over to an IRA without the need of an advisor. And when it comes to an advisor, my preferred way of being a financial advisor myself is a flat fee basis, meaning I'm going to charge you a fee up front. You have my services for a year. I don't like charging assets under management. I don't operate in an environment where I can get a commission for anything that I sell. And I feel like I'm giving the best advice possible, which also means that I don't want to pay an upfront fee. I'm fine with that. Like my income from a lot of different sources, including my bar, my jiu-jitsu academy, soon to be a CrossFit club, and my rental properties, all kinds of stuff, right? But the best advice that's going to be for you, if you need unbiased advice, is either going to be on an hourly basis or an upfront fee. Meaning, and go to someone who works for what's called a registered investment advisory firm. They have to act in a fiduciary capacity for you. That's part of the entire business model of the A. If you go to a broker dealer, they don't. They have to recommend what's suitable to you, and there's all kinds of mental gymnastics and verbal gymnastics that you can do to get around considering what is actually right for you and what is suitable for you. And I think there's a big difference between those two statements. So your RIA, registered investment advisory firm, is much more likely to do what's right for you and not for them. But no, you don't need one. But if you have to get one, go for an RIA. So outside of my 401k, helping my dad with his investments, I learned to buy and hold it advantageous for capital gains and dividend taxation. Yes, especially when you're looking at if you're an older person and you're investing and you're looking at retiring sometime in the next 10 years, building a portfolio of stocks that kick out qualified dividends, depending on your tax bracket, could mean a lot of tax-free income in the future, income that's it's taxed at an extremely low rate. And yeah, paying 15% capital gains rather than, and I think that's what a lot of people don't understand or didn't understand until this year when they're starting to do their taxes, that for every sell transaction that you made last year, there's something called the wash sale rule, which means that you're not going to get to use a lot of the losses that you think you're going to be able to use. And also, you're going to pay regular income taxes, ordinary income taxes on all of the gains that you made, instead of getting that preferential 15% rate. So even if you're going to frequently trade, you should at least think about holding stocks for a year just to get long-term capital gains treatment on those. So any thoughts at all on owning junior oil stocks at the moment? I think it's a good recovery play. I really do. I think that a lot of production, a lot of exploration is coming back. But let me be clear, we've already passed peak oil at this point. I think that for my personal investments in oil, I've been slowly divesting myself of oil over the last couple of years. And here's the thing. I used to own a 10% ownership in a smog shop here in Southern California. And you would think with our rules that I would want to keep that smog shop, particularly because it's a pandemic-proof business, right? It's basically everything but earthquake-proof. I actually sold it for a ridiculous amount of money right in the middle of the pandemic. And the person that I sold to is the owner of the shop. He thinks I'm crazy. And he asked me why. I'm like, look, there's all evidence shows that we reached peak oil a couple of years ago. All evidence shows right now that we've actually reached peak peak smog check here in California. And at this point, from this point forward, you're going to see business decline little by little over the next 20 years until most cars on the road are going to be electric cars. And let me be clear, most cars on the electric road, on the road 20 years from now are going to be electric cars, not because of some stupid law that California passed. And California just loves laws where there's no reason for a law. The reason why this is going to happen is because of margins. The per vehicle margin for the Tesla Model 3 within the next 3 years is going to be something close to like 39%. When you strip out all the CapEx and everything out of there, the margin on electric vehicles is just going to be so much higher than margins on internal combustion engine vehicles that is the reason that you're seeing all these companies say, hey, we're moving to battery electric vehicles in the future. They're doing that because their profit margins are going to be higher per vehicle. They're not doing that for all altruistic reasons. They're not doing that because it's better for the environment. They're doing that because they're going to make more money for their shareholders. I think this is the best way to promote environmental policy, is to create economic incentives to do so. What Elon Musk has done, and literally, like, when I think in the future, and this is another thought that people think I'm crazy for having, I think that in the future that Elon Musk could possibly be in line for a Nobel Prize in economics and a Nobel Peace Prize. Number one, the adoption of the battery electric economy could go a long way towards ending the energy wars that we've been involved with for the last century. And that's about as political as I want to get here. But also in terms of the economy, by demonstrating that his vehicles would eventually have much higher margins than internal combustion engines would, he basically he basically has instigated this entire switch for this entire industry, for this entire economy. Like, and it's not just vehicles. We're looking at energy production is going to be different in the future. Energy storage is going to be a big deal. So I think that, like, seriously, he could be in line. If he wasn't so annoying, he would be in line for a Nobel Peace Prize as well as a Nobel Prize in economics. So, yeah. But yeah, I got way off topic there, Chris, in terms of owning junior oil stocks. But yeah, I think that for a recovery play for the next 4 or 5 years, I think that's probably a good idea. I actually, one of the other things is pipelines would be another one, like master limited partnerships, the ones that have survived. Pipelines are going to do really, really well in the next couple of years as we see demand rise, and we see sustained demand rise for a while. But after the 5-year period or so, once about 10% of cars on the road are electric, and we have much greater infrastructure in terms of how those electric vehicles can be charged. Like, for me, for example, it's easy for me. Like, there's a washer and dryer 240 volt hookup right in my garage. I work from home most of the day, and then I go to my Brazilian Jiu-Jitsu Academy at night. My car can charge at home all day long, and then I need to drive it at night. I drive less than 1,000 miles per month. I will never need, and I have solar electricity. I'll never need a charging station. I can charge my car at home. And so I'm the perfect person to own a Tesla. I do not own a Tesla. But I'm the perfect person to own one. Every time I've had the opportunity to buy a Tesla, I ended up buying the stock instead. And let me tell you, that has really worked out well for me. Silvio Micali, that's right. Silvio Micali is the founder of Algorand. He has a lot of, dude, the guy's actually a serious academic too, and you should read some of the papers that he's written. It's a little bit hard to digest, but go ahead. I would definitely take a look at that. Can one beat the market by investing 80% in FANG? Okay, so this is something that let's talk about what the market is. What is the market to you? Is FANG going to be the NASDAQ? Is it the S&P 500? So let's assume it's the S&P 500. Yes, you could possibly outperform the S&P 500 over time using any combination of stocks, but you're going to have a higher degree of risk, meaning there's also a greater chance that you will far underperform the S&P 500. So when you look at Facebook, Apple, Amazon, Netflix, and Google, I'm looking at companies that are all really matured at this point, and actually have a greater chance in a lot of ways of being out-innovated and not being nimble enough to keep up with times. I remember I read an article way back in 2001 that listed the 10 companies that were supposed to dominate the next decade in tech. And I don't remember any of them offhand, but the only one of those 10 companies that actually survived was Juniper Networks. Every other one in that article in that 10-year period went out of business. I do remember that. So, because it was about 2010 when I, found the article again. And look, this was put out by a Goldman and Sachs, a talking head for Goldman Sachs, and I thought this was gold. Like, I remember having investments in most of these companies at one point, but any company can fail over time. But it's not just failure that causes your portfolio to underperform the market. Sometimes it's just a company not living up to expectations, or you're investing in a company after all of that exponential growth is done for. So I think there's going to be a new FANG in the future. That the current FANG that we have now, it may have been the best decade over the last 10 years, but it won't be the best investment over the next decade. That never is. In fact, there's plenty of good research on this subject too, that whatever the last decade's best investment was, it's not going to be the next decade's best investment. So Kent Go, Neo price target, end of year 2021. Kent, you must be new to my channel. I never give price targets. Never, ever, ever. 2 reasons why. Number one, I'm an actual financial advisor, and I'm not allowed to do that except under very specific circumstances. Number 2, I actually don't think that price targets are incredibly useful, right? If you look, I did a video on top 4 reasons to sell a stock. The stock reaching a certain price to me is never a good reason to sell a stock. Achieving a goal is when I'm going to start selling stocks. I'm probably not going to sell Neo until I retire. And when I retire, that's looking closer and closer. I'm probably looking at fully being retired sometime in the next 5 to 7 years. And retirement means different things to different people, meaning I'm still going to have business interests. I'm still going to make videos on YouTube, but there's a lot of stuff that I'm not going to be doing. And I'm probably going to be making YouTube from my boat down on the docks and spending most of my days fishing, but or doing whatever I do then. But that's the thing, is like, I don't sell based on a price target, and I would hesitate to give a price target because that would be me giving advice to people to sell at a certain price, where that really needs to be individual and related to your own financial goals and your own particular financial situation. So Shula's Joe says, it's true. If you look at companies like Toyota, GM, their actions scrapping EV1, the legacy auto very resistant to change. Elon gave them the shove in the right direction. Yeah, and that's why I'm saying that he may actually end up getting the Nobel Prize in economics. So, will mega caps outperform? Factor says no, but recency bias says yes. Yeah, that's a really succinct way of putting everything that I said. Yeah, that's actually, yeah. You just took 5 minutes of explanation and took it down to 2 lines. Thanks, Jonathan. Doji to the moon. Man, I've heard that so many times in the last month or so. It's been unbelievable. So, have you noticed that the whole stock market after hours is frozen since 4 p.m.? I have not. Anti-racist radio. I'm not sure what you mean by that, Simon. Okay. Let me go back here and let me see if anyone had questions that I haven't answered. And let me see here. So part of the, Joe says, part of the reason I'm investing now is because I'm concerned about my medium to long-term chances of being automated out of work. Honestly, man, Sheila's Joe, this is a large reason why I have my life arranged the way my life is arranged. As a financial advisor, I have seen obsolescence creep into people's lives over and over and over, with people who thought they would never lose their jobs. And if they lost their job, they'd be eminently employable. And this mostly happens to middle-aged men, where they get so confident, they hit 45 or so, they get fired from their job, they never recover those earnings again. And when I say this mostly happens to middle-aged men, that just happens to be my experience. Maybe it happens to middle-aged women. Maybe it happens to women at every age. I don't know. But in my experience with my clients, it's been mostly those middle-aged men who lost their job in their mid-40s to mid-50s. They didn't change their lifestyle. They never were able to get a job that could pay for their old lifestyle, and they ended up basically their retirement plan failed, right? And usually, and it's hard to give that advice to someone, hey, you really need to cut back on your spending because you are never going to replace the income that you have now. No one wants to hear that, and you'll lose them as a client. I know, because I've told a dozen people that and lost them as clients over the years. But when it came time for me to do this to myself, I said, look, I'm going to take my own advice. Part of the reason that I bought a Brazilian Jiu-Jitsu Academy is because that is something that can't be automated away. No matter how many techniques that you show on the internet, you aren't going to be able to replace, actually live training with a partner on the mat somewhere. Part of the reason, that I'm buying a CrossFit Academy is, number one, it's low capital output for high potential returns. But number two, it's one of those things that's membership based, it's subscription based, and it's something that that basically is not going to be replaced by automation. Everyone should be thinking about this. My dividend portfolio that I started setting up in my late 30s was because of that very reason. Is because that with you think as a financial, I kind of always realize that as a financial planner, the idea that most of us are going to be replaced with automation is probably in the future. I think that for CFPs right now, there's roughly 1 million financial advisors in the United States. Maybe like 75,000 of them are CFPs. I think that 15 years from now, it's going to be mostly CFPs in the business, and your average Joe financial advisor really won't exist. You're going to be doing concierge service for really high net worth individuals. And in that case, you get a human financial advisor. But if you have less than $1 million, you're probably getting a computer, right? And I think that that's probably what's going to happen in the future. Yeah. So hold on a second here. I really like your new wallpaper. It looks pretty realistic. It actually looks really realistic on the actual camera. But I don't really, yeah, my webcam is set up a little bit differently. So do you have any call options on Lee? No, I just sold call options on Lee, which generally means if I sell an option on something that the price is going to go up like a rock or go straight up to the moon. But no, I don't have any call. Just let me, so Simon Ross says, I don't want to be on. Dogecoin went up 1,008% in the last month. Man, I wish I'd been in on that ride, but yeah, you can't. I'm not going to hit everything. Like, it's definitely not an investment. It's yeah. Go back to your previous discussion. Why do you think EVs has a larger margin to ICE vehicles? Ken, the reason for that is pretty simple. Your electric vehicle engine, your internal combustion engine has roughly anywhere from 2,000 to 4,000 parts, depending on which one it is. Your electric motor has somewhere between 75 and 100 different parts, and only a few of them actually move. Electric motor technology is mature already, and it's a lot simpler to make than an internal combustion engine, and there's just a lot less that goes into it. Not only that, a lot of what you're paying for the electric vehicle is software, at least in the future, or at least currently it's software. And you're still getting software-like margins on the software that's going into the electric vehicles. So the idea, and this is kind of the calculations that I was looking at, Tesla's probably going to be able to make a $25,000 vehicle for about $12,000 in the future. And they're going to make roughly $13,000 in profit on that. I'm actually thinking that their $25,000 vehicle is going to be a $20,000 vehicle with 220 miles of range, and it's going to seat 4 comfortably. And and that's what I think is going to happen with a $25,000 vehicle. Thoughts on Ethereum Classic? I have not thought about Ethereum Classic in a very long time, other than the fact that when I'm scrolling through Coinbase, occasionally I see Ethereum Classic. So Coinbase went public recently. So there's a couple of things that I like about Coinbase. I've never experienced the outages that everyone seems to complain about. Like, whenever I want to trade something, I'm able to trade it without a problem. So the thing with Coinbase right now is Coinbase is really a kingmaker in terms of cryptocurrency, but just in the United States. Outside of the United States, there are some large cryptocurrency exchanges that absolutely dwarf the size of Coinbase. Coinbase is really tiny compared to a couple of international players out there. And for the life of me, I just cannot think who they are right now. One of them was one of them, they advertise to me all the time. I just cannot think of the name right now. But one of the things about Coinbase is that it's kind of a kingmaker in cryptocurrency, meaning that if you want to have your cryptocurrency traded, you need to be on Coinbase. And Coinbase just doesn't have everything. I looked for Dogecoin this morning on Coinbase, and it's still not there, as far as I know. Maybe I missed. Maybe you guys know, but I couldn't find it when I looked for it this morning, and I didn't look very hard. But there are thousands of cryptocurrencies out there, and they maybe have 50 on their platform. So they're kind of the kingmakers in this space. I don't think that's going to last forever. I will say that them going public at this moment was probably kind of the best thing they could do. I mean, they raised more money than I would have ever thought they could have made. They're a company that's been profitable for years. But this is one of those times where I think that the exponential growth for this company has already occurred. This was the most legitimate IPO this year. But I also think that they are facing more challenges probably than people realize. There are just better cryptocurrency exchanges out there that are just better than Coinbase. And I think that they're not going to hold on to that number one spot forever. And I think that all of these other platforms are going to add cryptocurrency trading, and you're going to see, unless I want to see what Coinbase is going to do with all the money they raised. Are they going to go into some other aspect of blockchain technology? Are they going to develop some other aspect of blockchain technology? I think they have to go in that direction. They can't simply be a cryptocurrency broker forever, because right now, for the longest time, they were really the only one out there, right? The only easily accessible one out there. But right now, you're going to see a constant cannibalism in terms of fees. Fees are just going to get lower and lower and lower. Your per transaction fees are going to get lower and lower and lower. pretty soon. Like I said, it's going to be something that's like Robinhood eventually, where these companies are making their money off of order. There's going to be some other way that they're doing that, but it's going to be free on the outside to the consumer. They're not really going to see it, and the competition is going to be really, really destructive. So, Eric M says small caps trade at slightly higher valuations compared to the last 20 years versus mid-large caps are extremely overvalued versus 20 history. Is small where the value is, or is it a value trap? So that would actually be a really recent phenomenon. And like I said, that's like we were talking about forward indicators. Where your small caps are, the valuation of your small caps is really a forward indicator and where people think the economy is going to be. So the issue with like small cap value, small cap growth in small cap one, this is a sector where you should really strongly consider using an ETF, largely because a lot of those companies they're going to fail at a higher rate than large cap companies are. I mean, just because of the fact that they're much smaller. But number two, I don't think that it's a value trap, because I was looking at this multiple like a week ago. Maybe it's changed in the last week or so. But yeah, it's higher than it's been in the last 20 years on average, but not higher than the highest points in the last 20 years. And at all of those highest points in the last 20 years, it was always right before the economy really started to turn around. And then you saw earnings kind of catch up with valuations at that point. So yeah. And so I don't want to be ungrateful or arrogant, Simon Ross says. Simon, I'm sorry, buddy. I don't know what you're referring to. Blog Your Niche says, I did a long call of NEO at strike price of 40, expiring January 2022. Thoughts if that was a good plan? I think it's probably not. Well, so selling a covered call. If you're selling a covered call, it's never a bad plan. What's the worst going to happen? It's going to get called away. You get your money, and then you can repurchase the stock, right? And your what you got in terms of payment was taken away from the cost basis, right? So it's not a terrible plan. Selling a covered call not under any circumstances, but under 95% of circumstances is not going to be a terrible plan. I will say that I don't know when you bought that call at 40, just at January 2022 at 40. I looked at the opposite chain this morning, but I didn't look that far out. That would be something that I think would be I mean, so 80% of options expire unexercised, but a higher percentage of call options are 80% of options expire unexercised. That's not one that I think is going to expire unexercised. I think it's going to get exercised at some point in the year. I don't know what you sold it for, but I would say that if you look at the premium that the person paid plus a $40 strike price on there, you're probably looking at that being exercised this year. I think so. Simon Ross says, what is your premises on hubris and nemesis? Simon, I got to be honest with you, brother. I'm not understanding your train of thought here. So if you want to email me and ask me in a little bit clearer language when I have time to think about that, I'll definitely do that. Bennett's offers more currencies than Coinbase. That's who I was thinking was Bennett's. It literally has almost twice as much money on deposit as Coinbase does. Do you have call options on IPO? So Chris Palmer, I don't have call options on Sofi because I own a lot of IPOE outright. Martin Casano says, got to run. Thanks, Jason. Super interesting insights as always. Thank you. Thoughts on Upwork? So I use Upwork a lot for various businesses. I do it for a lot of work that I do on websites, for research that I need done on certain things. I have a content that I'm putting together for someone else's jiu-jitsu website right now, and I use video editors for that. I'm not going to do the video editing for that one. And one I'm doing for my own new jiu-jitsu venture that I'm putting together too. So I use a lot of them, and I think that the gig economy is not going away. And I think that a lot of people who went to making money online via the gig economy, they don't want to go back to work for a regular company. Like I don't know what you would have to pay me to get to go work for a Fortune 500 company again in the financial industry. It's like there isn't much that I liked about working in an office. There isn't much I liked about my many of my coworkers. There were many of them that I really did like, especially the last place where I was. But when I worked for another major brokerage house, I didn't like any of my coworkers. We didn't come from the same environments. I grew up in rural East Texas, and I'm basically, in a lot of ways, just a good old boy. And I did not get along with the raised on the golf course crowd. And that just wasn't my thing. But so I don't. Anyway, not going to go back to work in that. And I think that a lot of people who got used to being a contractor through Upwork, if they know how to manage their time, and I think they're actually going to stay there. I know that I've been working with one particular guy now, a database programmer, for 3 years, and he works out of his house in Hungary and makes a lot more. No, I'm sorry, Bulgaria, not Hungary, but he makes a lot more working in Bulgaria, virtually for individuals in the United States than he would be by going to work for a company actually in Bulgaria. So I think that, I think that Upwork is here to stay. I think they're just going to grow and grow and grow, and that they're becoming more and more, between them and Fiverr. They're really the only, I know there's other platforms out there, but I don't think of any other platforms out there when I need work done. I just think of them and Fiverr. That's it. I think long-term Upwork, I don't own Upwork, but I think long-term, that's something that I'm going to consider putting in my portfolio, just because I use them so much. So Coinbase has the advantage of being a KYC exchange, big regulatory head start. Yeah, Jonathan, it's a big regulatory head start, but it also defeats some of the purpose of it defeats some of the purpose of using Bitcoin and using cryptocurrencies for what they were intended to do, which is to decentralize finance and provide freedom from central banking. I think that Coinbase kind of did what they had to, that in order to get wider acceptance for Bitcoin, that they had to have some way of integrating in with the US financial system. And they're not completely integrated in with the financial system. I sold a couple of times Bitcoin this year, and I never received tax documents, and I had to do an estimate. And trust me, I've had Bitcoin for a long time now, and I kind of forgot what my original entry point was. So they're not fully in line with tax reporting at this point right now. Dr. Katz says, what are your thoughts on ACTC Proterra? I don't have any thoughts on that right now. Maria L says, smash the like button, everyone. You know what? You guys have to remind me how to be a good YouTuber. I constantly forget to tell people to subscribe to my channel. I constantly forget to tell people to like my videos. I constantly forget people to tell people to go and check out my Patreon. Guys, please check out the Patreon. I think that some of the discussion that goes on in the Discord chat is absolutely amazing. It's full of really rational people that talk about tech musings, nerd stuff. I'm the biggest offender. Like today we had not a discussion. We talked about a couple of things related to like theoretical physics and a possible fifth force of nature being discovered by this Hungarian team of physicists. We're having a lot of really intelligent discussion there that's reasonable, a lot of questioning of assumptions, which I think is really good. So if you guys get a chance, that's all the promotion that I'm going to do about the Patreon, other than just mention it. After this is done, I'll put a link into it, and there's a link in all my other videos. You guys can check it out. So any thoughts on when Starlink will list and how much they will be worth backing? Well, I have no idea how much Starlink is going to be worth. I will say that listing is not even on the radar right now, as far as I know. They're not even on the radar right now. And I'll be honest with you, I think that Elon Musk has a lot more on his plate other than listing Starlink. And David Lee came out with, you guys don't know David Lee Investing. He came out with a sort of thesis that that Tesla should form a holding company called X and put all these companies underneath it, right? And so we can all participate in the value of SpaceX, participate in the value of Starlink and all that. And I've heard the pros and the cons from that. But I'll say one big con is that one big pro from that is if you raise money from this X company or this holding company, it allows you to pass money down from whatever the holding company name is to the subsidiary companies. Right now, the success of Tesla, and I'm not talking about how many cars they sell, I'm talking about the success in the secondary markets, success in going back to secondary markets, selling stock, raising billions, and having $20 billion in cash. you can't really transfer that to Starlink in a legal manner that makes sense. There's all kinds of hoops that you have to jump through to do that, right? So I do think that it makes sense for Starlink to go public at some point. I really don't understand entirely what their business model is at this point. I don't understand what's going to make them different than any other satellite company out there. I really have to look into that more. That's not been the focus of my studies lately. But yeah, let me see here. Omar says, thoughts on District OX. Sorry, Omar, I'm not sure what you mean by that. And Chris Palmer says, do you own any Opendoor? I actually don't. I remember when I did my video, that was a company that I said I was probably going to buy sometime in the future. Now would actually be a decent time to buy in, right? It's declined a little bit from its IPO. At least I think it has. I haven't paid attention to it in a couple of weeks. But as time has gone on, and I've looked at the performance of that company, and I looked at the way the market is going here for real estate, I'm just a little hesitant right now to pull the trigger on any of those. I already own Zillow, and I already own Redfin, so I'm a little bit hesitant to pull the trigger on something else right now, just because I don't want to be too balanced in that sector. Like I own a home. That's not considered part of my investment portfolio because it's where I live. Right? I don't even think of that as being part of my net worth because I have to pay for a place to live, right? But I own rental properties, I own REITs, and I own some real estate stocks, which means that between EVs and real estate, man, that makes up a lot of my net worth. So if I'm going to add Open, I need to get rid of something else, real estate in my portfolio, and replace it with Open. And I'm not willing to do that at this point. I'm not saying it's a bad investment. It's definitely not. I just have lots of other investments in real estate at this time. So yeah, definitely one of the things that I thought about in the last couple of months is whether or not I was going to do that. But yeah, and there's a lot of stocks that I've done videos on where I don't own them, but I say I might be buying them in the future. And only a couple of those cases, like Li Auto and was the only one that I bought. And man, I bought that at the wrong time. I'll tell you that much. I think I bought it like right around $30 a share or something. And yeah. Chris Palmer says, thanks, Jason. I bought a decent amount of Open at 16. Is that where the price is right now? I think the last time I looked at it, the price was around 22 or 23. So it may have been a while since I've looked at it. But I think Open at 16 is a good price for a lot of reasons. I think number one, it's worth more than that based on where I think the earnings are going to be. But a couple of things that in terms of IPOs this year, I think that some of that Apex Clearing is going to be a really good IPO. I don't think you're going to make a ton of money on day one. I think that on a 10-year basis, you're going to make a ton of money. I think that Sofi, I think on a 10-year basis, you're going to make a lot of money. I think it's actually fairly likely that Sofi doesn't perform all that well on day one of their IPO. And you're looking at probably end of 2021 when people were like, holy crap, this really is a company that's like inches away from profitability. I think that's when Sofi really takes off, is probably by the end of 2021, first quarter of 2022. If you guys don't know this, I put a lot into, for me, it's a lot. And I don't normally do this, go big on something that hasn't gone public yet. I've owned a lot of Spacs, but never gone really good big. Sofi is the one that I went big on. I really like their plans in terms of the financial industry. I am right now down on that investment. I am not planning to sell, even if it kind of like tanks on day one. It's a long-term investment for me. I'm not expecting big gains out of them probably till the beginning of 2022. The tax scam. That is a ISIS mirror music. Investigating ISIS symmetrical private school mathematics and music. ISIS, don't know what you're talking about. Interesting though. ISIS, the music, the tax scam. Wow. Okay. Interesting. Is it a good time to buy Neo, Li, Auto, and Xpeng? What are the future prospects? So we cover Neo, Li, and Xpeng a lot in this podcast or in this live cast. And Rikesh, that's something that I've said, that I think that if you were to buy any one of those companies right now, that 5 years from now, it's going to look ridiculously cheap. When I look at all the sweat that I poured out buying Tesla at $33 a share, and that was good. That was good money for me back then in 2011. buying it at $33 a share, how much I agonized over it. And even 5 years later, I'm like, it's nothing, right? 10 years later, I'm like, holy crap, did that do well, right? I think that you're going to be in a similar situation when it comes to all three of those companies. I think all three of them have a very good chance of displacing some of the smaller internal combustion engine players in China. I think the Chinese government is finally going to let a couple of those go away and be replaced by the new generation of entrepreneurs. Let me see here. I appreciate you, Jason. I went nuts on IPO too at $14.92. So I own it everywhere from 14 to 21. I bought it in small amounts. And Marie L says, what do you think of ARK Investments? Man, I love ARK Investments. I really do. So I don't pay much attention to their daily trading. I pay a lot of attention to their white papers. I pay a lot of attention to their research reports they put out. And I pay a lot of attention to their long-term strategy. You got to remember, like, as an individual investor, you're never going to match the short-term trading prowess that they have. And also, they're not always right about everything when it comes to short-term trading. But I think they're going to be right about most of their major large theses when it comes to how the economy is going to change over the next 2 decades. I think that the way they look at manufacturing, investing in manufacturing based on Wright's law and cost declines is not necessarily a new way of looking at investing, but it's certainly a new way of looking at creating an investment company like ARK Invest is. I think that they may have slightly missed the mark in terms of when genomic medicine is going to take off, but I think they're ultimately going to be correct that it's going to be the next $1 trillion opportunity is genomic medicine. It's one of those where I don't try to match what they're doing in trades because they have a different time horizon than I do, and they have a different priority than I do. I do not care about making money in the short term on my investments because I don't have any investors to please other than myself. ARK Invest has to meet that demand for some sort of short-term return, right? Because they've created this environment. I don't know if you guys are familiar with a company called American Funds. American Funds is one of the most famous mutual fund companies out there. They're a fully commission-based company. It used to be that if you wanted to buy another fund, their A share, you paid $5.75 upfront, 5.75% upfront, huge commission to pay. All right, if you did a C share, you're going to pay 1% upfront, and you'd pay basically 1.5% a year on your funds. If you went in a B share, you didn't pay upfront, but for the first 6 years, you paid like a ridiculous amount. It actually still ended up being worth it when you looked at the long-term returns over that time. Even with the commissions that they charged, they were still outperforming most of their peers. And these were not index funds. These were actively managed mutual funds. But when I say actively managed, they compensated their managers on a 4-year, 8-year, and 16-year rolling bonus structure. Meaning, in order for them to get the most money out of their management prowess, they had to be superior performers over a 16-year period, right? And this compensation structure limited how many trades they made because the trades they make inside of that portfolio are taxable transactions for a lot of the investors. It also limited the amount of trades they made because they know very well that the more frequently you trade, the more likely you are to be wrong about certain things. And they also made sure that they were doing their research on a long-term basis rather than trying to satisfy a short-term need. And that produced a company that over a 70-year period consistently either outperformed their index or came very, very close to it, or was still in that top 25% quartile for returns in their peer group over any sort of like 10-year period. They got beat up quite often on a short-term basis, meaning that you look at a 4-year period and they were underperforming their peers. But when you make that period longer, they looked really good. My worry is that because of the way the ETF structure works and the demands on Cathie Wood as a celebrity investor now, my worry is that is going to change. So American Funds has never produced a celebrity investor, which I think is one of the main reasons why, because they do things in a team environment. I think that's one of the main reasons why they've had superior performance over time is because of that. Every time you've had one of those, like look at Peter Lynch and the Magellan Fund. It was the greatest thing since sliced bread for 20 years, and then had like a 10-year period of underperformance, and now it's kind of coming back again. I think it was Peter Lynch. I don't remember. And then there was Bill Miller from Van Campen Funds. He did kind of the same thing. 20-year period of outperformance, becomes a celebrity. All of these articles are written on him. Outperforms 20% over 20 years. No one's done any better. Boom, he's a worst performing mutual fund for like 5 years in a row, right? Achieving that celebrity status just seems to be an indicator that you're not going to be able to do it later on in life. I want to see it because I think that actually this year is going to be tough for Cathie Wood. I think you're going to see a lot of outflow on her ETFs. I want to see if she really sticks to her long-term strategies. I think people read far too much into what she does on the short term, and they should be thinking about reading the white papers, not listening to interviews. Read the white papers, read the research. Tasha Keeney is another person you should be listening to in that group too. I love ARK Invest, but I really love their long-term research. Tax money for ISIS and Antifa is a cruel financial joke on poor Americans. Hey, so I don't really get political on my channel, ISIS mirror music. I just don't do that. If you want to get political, go to Heritage Wealth Planning. Josh is a friend of mine. I don't agree with him politically on most things, but he is a friend of mine. He does politics and finance together. I just don't do that. Friday Pill says, hello, what is your opinion on this tech sell-off? Do you have any predictions about the future? I think that tech's going to go down for a while. I think that the panic that we talked about being over like in late February, early March, I think that's done. But I think there's a lot of pressure. Look, there just didn't seem to be any avenue to make money during the pandemic on stocks like the 3Ms and your Home Depots and things like that. And these like really large mega cap companies, those are starting to come back. The market is normalizing to a degree, and we're seeing flow between sectors. We're not seeing money leave the market at this point, and we won't see money leave the market at this point. Like that's people are too worried about inflation to see money leave the market. I am not particularly worried about inflation because I realize that at this point, if we do have inflation, there's nowhere for money to go other than the stock market or into real estate. And real estate right now is just ridiculous. Let me see here. The only way of catching a hype train I've ever discovered is to miss the hype train before. That's true. That is true. Dogelon bars. Yeah. Okay. Yeah, that's actually pretty true. Like if you want to catch the next hype train, you got to miss the one that came before it. Any thoughts on Arrival's new partnership with Uber? No thoughts on the partnership with Uber, but I do have thoughts on Arrival. If you guys haven't noticed this, and this is like a really nerdy thing to be interested in, I'm extremely interested in manufacturing processes and how manufacturing efficiencies can essentially destroy competition that is superior. And that's happened many, many times throughout history, not just with one company destroying another using an inferior product to do that, but mass production. But I'm talking about entire societies that eliminated other societies by being able to mass produce something. In a lot of cases, it was like mass produced trained soldiers who could put it this way. One of the most fascinating things in history is how the Mongols started to lose dominance in the steppe. And it happened really with the beginning of the creation of firearms. It was easy to train a peasant to point in mass when you didn't have to aim them. You could just take 1,000 peasants, give them all firearms, give them all a point in one direction to fire. And it's pretty likely that you're going to kill a dozen or so Mongols, but they're going to kill your 1,000 farmers. Great. Those Mongols are going to take up those weapons. They're going to take them away. They're going to run out of ammunition. They're going to be useless in 2 weeks. But you can train an entire new crop of farmers to pick up those muskets and use them in another 6 to 8 weeks and stand in line and shoot another line of Mongols. Where that Mongol, it took him a lifetime to learn how to use a bow from the saddle, right? It's this whole quantity versus quality aspect. So I'm really curious with Arrival's manufacturing methods, how they're going to match quantity with some people who are already pretty far along in that manufacturing process and already have really good, good qualitative control of their process as well. So I like that idea of distributed manufacturing. I like that idea of small scale manufacturing in different places. I'm just not sure that it's going to work. Just because I like an idea doesn't mean it's necessarily a good one. I just think it's cool, right? Yeah. But Maria says great insight. I have American funds too. Anvar says, I really enjoy your content, a sound voice in investing with no hype, just well presented, realistic thoughts. Keep it up. Love this channel. Thank you so much, Anvar. Thank you so much. Yeah, once again, just want to remind you guys, super chat features are on. If you guys wanted to try that out. And Isis Mirror says, Heritage Wealth Planning by Josh. Yes, Josh and I used to work for the same employer a long time ago. We didn't really know each other well when we worked at USAA. But after I left there and he left there, we kind of hooked up because of the YouTube thing. And he's the one that sort of inspired me to get started on YouTube for a couple of different reasons. And he's actually helped me out quite a bit. Like I said, he and I are very different people, but I guarantee you that he and I can have a beer together and a great discussion about a great many things, even though that I think a lot of his positions are just irrational. But I think that he's a great guy, and I think he's very intelligent, and he knows a lot about finances. But he and I disagree on quite a bit. If there's a friend of Pillow says if there's a market rotation going on, don't you recommend moving from tech stocks to stocks in the Dow, for example? I personally won't do that because I already own stocks in the Dow. I already own stocks in the S&P 500 because the majority of my assets are actually in ETFs. So I am actually using this opportunity and I don't have a ton of extra money coming in right now because I'm trying to start a new business. But as I have more money coming in, I'm actually going to be purchasing more tech stocks, right? When tech stocks were kind of hitting their highest, more of my extra income was going into the S&P 500 fund, or not the S&P 4, which is the one that VTI is the one that I use quite a bit now, or into, and I did a lot of investing in RES, which is a REIT of REITs. So it's a collection of residential REITs and storage REITs. Yeah. So Nathan W says IPO has a 30% short. Last time I looked, it was about 23%. That's still super, super high. I know a lot of people talking about IPO or IPOE are hoping that there's going to be a GameStop-like short squeeze. Look, if that happens, I'm going to welcome it. It's going to be awesome, right? Because I'm going to make a lot of money off of that. But I don't think that's going to happen. 23% is not 130% where GameStop was. So I do think that there's some short pressure on there. That's why I'm not expecting great things out of day one. I do think, though, that as a long term, this is a very good investment. Sheila's Joe, thank you so much for using the super chat. I always like it when someone pays me in a foreign currency. I think it's very. I don't know why I find it so interesting, and I like it so much. One of the things that stunned me about YouTube is how many of my subscribers and fans are non-American. How many of them are from all over the world, and that's actually reflected in what I'm seeing on my use statistics on YouTube analytics. So, Anwar says Neo and xpev have been taking hits despite good news, and more interestingly, BYD with great sales and great news. Why do you believe the market hasn't reacted to it for them? Well, I think the market was overreacting to begin with. I think that in terms of future promise, these are still radically undervalued companies. In terms of their current revenues, they're radically overvalued companies. And I think that there has to be a period of consolidation and catch up for each one of those. But also, like I said, people just get tired of the constant good news in certain ways. They don't necessarily believe it. BYD is one of those companies where they finally took off this year, but in reality, they should have been at their current valuation 5 years ago. Right? This is a company that was already the third or fourth largest battery producer on the planet, diversified company with 200,000 employees, billions of dollars in revenue, and operations in 24 countries. Right? They should be at a higher valuation than they are now, probably, in certain ways. Let me see here. If there's but back to Frantic Pillow, the market rotation in there. Rotation only makes sense if you're in the right position, tax-wise to do that. If you have positions that you're beat up on and you don't think that those positions are coming back, or there's some definitive reason why you think that this company has reached a peak in its price, then maybe that's the asset that you want to use to rebalance. But I wouldn't sell out of something that you like in the next 5 years just because you think you're going to get more money in the short term in another sector in the next 6 months. I think that is the exact recipe for actually underperforming the market over time. And Chris Palmer says, excellent buying opportunity in the tech right now. Buy when the tech market is fearful. Yes, but I think everyone should start being a little bit more choosy about which tech they're investing in. There's a couple of things recently that, in fact, even what was it? ARK Invest did a podcast on Vuzix recently, and this is a company that I'm just not as excited about it as they are. Yes, I think I'm very impressed by the metaverse. Yes, I think that AR technology, particularly augmented reality technologies, may be more popular than virtual reality technologies will ever be. I firmly believe that, and I think it's going to have a lot of business uses that we can't even think of right now. But a lot of the companies that are out there right now at this point are nothing more than 15, 20-year science projects that haven't developed a lot of revenues. The one I'm thinking about is Microvision at this point. But Vuzix is not, or Vuzix, or however you want to pronounce it, is really not that far behind in terms of my estimation. They've got some really great technologies, really interesting technologies that are currently licensed out to some bigger players, and they aren't bringing in the revenues they need in order to research new technologies and bring them to market. So I have my doubts about a lot of these companies, and I would prefer, I think, to be a little bit more scattershot rather than concentrating when it comes to my bets on the metaverse here and my bets on augmented reality technology. I think it's just very hard to predict where that's going to go at this point. And I think that's the case with a lot of things in tech right now, is that we had so much enthusiasm in 2020 for all things tech that there was very little actual due diligence done on investments. And even now, people think they're doing due diligence on business, but they're investing in the stock and not in the company. They're looking at how the stock has performed in the past rather than how much the company's pouring into R&D, how much the revenues have grown in the last 5 years, and what are their prospects for growing the revenues, what is their total addressable market, how much of that market share can they wrest from other individual companies. And so when larger players step in, how are they going to compete, right? A lot of those questions just aren't answered. And I think one of the biggest examples of that is looking at Microvision over the last year, where they were at sub $1 a share. They spiked by August on rumors of an acquisition by Microsoft. The biggest rumors that I saw for what their technology is going to do in the future, I talked to someone who was actually a physicist, and he looked at it and said, "Nah, the physics for these assumptions are all wrong. You're not going to be able to use these products in these applications." And I didn't buy them for a couple of different reasons. Number one, they're making less money now than they made in the last 5 years. But number two, I think it's one of those pure cases of them grabbing onto a piece of the general tech mania and riding it up, and the company exploiting that by doing secondary sale after secondary sale after secondary offering, right? Just offering stock after stock after stock and building up a war chest. Another company that did this is Nano Dimension, right? They're still not selling their product. That's the issue. They're not selling their product. They basically sold a few of their printers since November, just a few of the printers since November. And in that meantime, they now have 4 new competitors that also have their own ability to print PCBs, have their own patented dielectric ink, right? I will say one thing. The machines do look a whole heck of a lot less cool than the Dragonfly Pro does. But they have 4 new competitors that are now in this space. They aren't the only ones anymore. But they built up a giant war chest by going back to the well 7 or 8 times over a 4-month period and raising money through secondary offerings. They have billions of dollars on deposit right now. I think they have to be in line to acquire one of those competitors. But the last I looked, they weren't looking at acquiring one of their competitors. They're acquiring something in the AI space. And what it was just escapes me right now. But yeah, so I'm interested to see where these go. I'm more cautious right now probably than I was initially about a lot of these, not meme stocks, but basically stocks that spun up based on interest from ARK Invest or perceived interest from ARK Invest. BioNano was one of those that had perceived interest from ARK Invest. There's not a lot of evidence that they actually are interested in BioNano, but yeah, so very interesting. Social media has gone nuts over NNDM and Palantir. So Palantir may end up proving me wrong, but here's one challenge that I can give to you guys. Like I have worked in data analytics for a long time on the financial end. I am familiar with what Palantir does. Not only that, I worked for government service providers for a long time too. I've not worked directly with Palantir. I worked with a lot of Palantir's competitors, and I worked with a lot of other companies that do what Palantir does. I will say one thing: you guys are falling for the mystique to a degree. Like you're just falling for the image that they've created. You need to see that what they're doing in terms of revenue, profits, what they're bringing in that respect. They've got a lot of competition out there, and the fact that they've been around since 2003, they're in this space, and they're just now hitting. I think in 2020 they're just now hitting $1 billion in revenue. I think that's impressive. I really do. But I'm telling you, there's so much about this company that you don't know. And there's so much about this company that you don't know that kind of affect how much business they're going to do in the future. Yeah. So in terms of Palantir, like you gotta have to be a lot more careful with them. I own a little bit of Palantir. I own 100 shares of Palantir. And it's mainly because of a conversation I had with somebody who actually has worked with their software on the civilian end for JP Morgan. And that was a horror story, by the way, an absolute horror story. But it has nothing to do with Palantir itself. It's like seeing, I know a lot of the objections that that folks in Silicon Valley have to Palantir are politically based and are really unfair to a degree. Like you don't punish HP because someone used their printer to reprint copies of Mein Kampf and distribute them, right? You don't punish HP because of that. But people are punishing Palantir's reputation for the fact that ICE bought their software and then used it to make connections and find out where criminal aliens were living, or the fact that this JP Morgan consultant used it to spy on the executives of JP Morgan, right? It was a crazy story, but like you don't blame HP in the same way you shouldn't blame Palantir for that. So I think some of that criticism is unfounded, and I completely dismiss the fact that they say, "Oh, we only work with companies that are interested in Western." I'm interested in Western values too. I just don't use it to sell any products. I'm all about Western values and advancing the cause of democracy and all that too. I just don't use that as a gimmick for my company, right? So I completely dismiss that, not because I don't think it's a valid thing. I just think it's used for propaganda. So people have really sort of fallen for the propaganda, the mystique, and the PR campaign of Palantir, rather than looking at the numbers. The jury is still very much out for me. I'm very skeptical as far as, and here's one of the biggest reasons I'm skeptical is they asked Alex Karp why they were choosing now to go public. And his answer was, I want to reward the people that have been with us for almost 2 decades, which means that he wants to basically let those people sell their shares and raise money and ride off into the sunset, which means that a lot of that talent is going to be leaving. A lot of talent that created the company is going to be selling out and leaving. They're going to have a far less motivation. The other thing I know, like go onto Glassdoor and read about Palantir. You will see some very, very high employee dissatisfaction ratings for at Glassdoor. At least I did last time I looked. I know a couple of people that worked for them too, and they couldn't get over the cult-like atmosphere, the way it was to work there. And I think that now that they have gone public, and a lot of those really talented people stayed there in order to sell their shares, I think a lot of those people are going to move on and start their own companies that are going to compete directly with Palantir. And they all now have security clearances, and they can do that. So, and I'm really familiar with the security clearance process too, because I live in San Diego. There's so many government contractors here. I've had millions of them or not millions, but I've had dozens of them as clients before. And this is the way this always happens in the defense industry like this. And you're going to see some fracturing of their talent base. It's going to go to other companies. You're going to see competitors pop out of the woodwork here. Moneymaker, we covered Upwork a little bit. I'm actually a huge fan of Upwork as a user. Like I use their services all the time. I have long-term relationships with artists, long-term relationships with database designers and programmers from all over the world through Upwork. I don't own any of their shares, but I probably should because I use their services so much. Yeah. Anyway, folks, this was a surprise live stream. I didn't plan any of this. I want to thank everyone for showing up. And if you use the super chat features today, I really wanted to say thank you. It does make it kind of fun to do that, to do the live streams. And I always enjoy doing this. But once again, I'm ending the live stream because I'm hungry. That's always the reason I end it. Anyway, thank you very much for attending today. And I'll be sure to do more of these in the future. My schedule's just been hectic lately. I'm trying to open up a new business. But anyway, thank you very much for coming. And I'll see you guys next time.